Welcome to this Q1 report presentation with Renewcell, a company that makes the fashion industry circular. The presentation will be followed by a Q&A with participating equity analysts, and viewers can also ask their questions in the live chat. With that, let me introduce CEO Patrik Lundström and Toby Lawton from the company. Welcome.
Thank you.
So what are your feelings right after releasing the report?
It's a good feeling. I mean, we have now started up the production and it's ramping up, so it feels very positive.
Okay. Please go ahead and do your presentation. I'll be back for the Q&A.
Thank you very much. So, Renewcell, as everybody knows, I hope, for the ones at least have been following the company, we are a company that makes the fashion industry circular. We are the only one that has industrial scale, 100% textile to textile recycling. What we do is actually we're taking a linear value chain and making it circular. And we are the missing link for that, making that circular value chain workable. The highlights for the first quarter is that Renewcell 1 is now ramping up. It started up, as you know, in the last quarter 2022, but we're now ramping it up for the first quarter. And as you probably have seen in some of the numbers, and I'll come back to that, we are increasing the capacity month over month. We are now ramping up towards the 60,000 tons first, but also then in 2024 we will be ramping up to the 120,000 tons as previously communicated. We have also established a new or an increased credit facility of 75 million in order to support the ramp up. We have also we will initiate the 120,000 ton step once the first step of the 60,000 ton is established and well on the way. The customer feedback so far is very positive. Sanyo, they're increasing their volumes. They have also been very public with that they're going from the 30% mix-in that they have today to 50% second half of 2023 and then to 100% by 2024. The same has been voiced by Jibin Grace. So we are moving towards the 50 and 100% mix-in the market today. There was a small fire in one of the shredders that spread towards one of the filter units on March 22. And the damage was actually quite limited despite what was said in the press. And the production could be restarted within 10 days. The Capex for the 60,000 tons has largely been completed. And that's going to end up at approximately 1.3 billion. And the total Capex for the whole of Renewcell 1 of the 120,000 tons is still estimated to 1.45 billion Swedish, which is actually unchanged as previously from the previous communications. The financial highlights for quarter one, we are now reporting according to IFRS, and the reason is that is the way our type of companies internationally are reporting in general. The financial summaries from let's say that when you use IFRS is we had net sales of 30 million and EBITDA of minus 80 million, and the cash flow from investing activity was minus 56 million, which is largely taken so far, and we don't see that. We see that that's going to come down in the quarters to come. The earnings per share is minus 3.3 Swedish kronor per share. The production ramp up is going quite well. The prime production that we have right now has ramped up to 1,600 metric tons in April. I will come back to that in the next slide. And we are now continuously increasing toward the 5,000 metric tons per month, and we're doing this very controlled and stable in order to increase the capacity in a controlled way, and this is the way you do that. The second stage of the 120,000 tons will come into, we will start doing that, on the second half of 2023, and it will be established during 2024. But the step will still be initiated once we have actually come to the 60,000 tons. The ramp up, as you can see, if you look from December to April, is increasing. The dark blue bars is about how much we've actually produced, and the light blue bars is how much of that was prime production. And the let's say the black or the dark gray bars is how much we have delivered from the plant. And as you can see, we are increasing month over month. But what I also want to look at is how much we're actually producing of prime quality. So we're increasing the prime quality month over month, and that is an important factor when we are ramping up, because that means when we get more and more control in the production, we can continue adjusting and increasing the capacity as we go forward. So right now it looks positive. Nonetheless, we have to remember that we are in a ramp-up curve and things can happen. The team is working very hard, and we are doing the things that we need to do. We're solving the problems. They do not reoccur, but you never know. So we're in the ramp-up phase, which is a lot of hard work, but it's looking very promising as we are looking at it today. The Circulose brand is getting more and more recognized. We have done launches, of course, with the PVH, Ganni, Zara, H&M, and so forth. My personal issue is that I'm starting to lose track of all the launches being made, which is a good sign, I would say. To date, we have done more than 50 launches in industrial scale, and that is something that is important to bear in mind when you compare Renewcell to other type of companies. We're doing this all in industrial scale in the numbers of 10,000 garments and so forth. It's not a single small, let's say, capsule collection, but these are industrial scale collections. Milestones that we have achieved in Renewcell 1. I will not go through all these milestones, but a lot have happened. The way I see this is that the team had delivered on what has been promised. We have been a little bit delayed, but we are still delivering exactly what needs to be done. We're now ramping up towards the 60,000 tons, and by 2024 we're going to continue then, as already discussed. And then 2026, the plan is to get to 360,000 tons. And who knows, we might even look at 1 million tons by 2030, but that is not something that has been decided. It's just something that, what if? If we would have 1 million tons by 2030, we would have 0.7% of the world market. So the message here is there's room to grow. With that, I also like to mention that we have the Capital Markets Day on May 11. And for those who have not announced they're going to join, please do so. Unfortunately, all the seats are now taken, so the only way to get into the Capital Markets Day is to follow the broadcast that we're going to have. So please join that call. It's going to be an interesting day, and we're going to show the plant, but also a lot of what we have in pipeline and our strategy as we go forward. With that, I'd like to introduce Toby Lawton, our CFO, to take you through the numbers.
Thanks, Patrik. Good morning, everybody. Give me the clicker. Thank you. Good morning. I'll start off in my first slide just to say we have a change in accounting principles, which you may have seen in the report. So from the beginning of this year, we are reporting according to IFRS, which stands for International Financial Reporting Standards. The reason is that this is the way that most listed companies in Sweden and Europe report their accounts. So it means that we in line basically with other companies, and it's easier to benchmark and understand our results because we're using the same reporting standards. The differences are, there's two main differences. The first one and the biggest one is regarding leasing actually. And here we lease the factory building in Sundsvall, and that's the biggest difference. Then there's a smaller difference which is a bit more technical, but about capitalized interest during the construction period as well. But that's as I say, a bit smaller. The parent company is still reporting in the same way according to Swedish accounting standard RFR2, which it has to do and all and parent companies do in Sweden. So that's the comparables are still there for you to be able to follow our result using the RFR2, and the parent company still contains all the business. So it's still completely possible to track our development in that way. And that does make it a bit complicated for this quarter, so I apologize for that, but it will become straightforward going forward. This should be the only quarter where we have no comparable in IFRS, but going forward it should be more straightforward, so bear with us. And just then a financial overview, and the red box you see here is the IFRS numbers on the left, and you can see we had net sales of 30 million for the quarter. And you can see actually the parent company numbers on the right, where you also have the comparables for the previous year. And you can see actually when you translate across on this line and a number of lines, there's very little difference actually between the IFRS and the RFR2, so we shouldn't spend too much time on it. EBITDA minus 80 million, net profit minus 125 million. Cash flow from operating activities, which is mainly the EBITDA and the financial cost, and change in working capital was minus 102 million. Cash flow from investing activities, which is basically the Capex, minus 56 million. And then we have equity now at the end of March of 740 million. Net debt is a significant difference between the parent company and IFRS, because basically the building that we have in Sundsvall is both on the balance sheet as an asset, and the future lease costs we pay for that building are then counted for as net debt. That's the biggest effect on IFRS. So we have 1,007 in net debt at the end of the period, and then equity ratio 36, and average number of employees 121. If I just flick on to the income statement, and here I try and show you the development of our income statement, which I think is a important way to follow the development of the company. And on the left-hand side here, you see the figures for 2022, and from Q1 to Q4. And then you see the Q1 figure for this year under RFR2, and then on the right-hand side, the Q1 figure under IFRS, which is how we will follow going forward. And again, you see if you compare the two Q1s, the very little difference. There's only actually a difference on one line on the fixed costs. But you can see we had revenue, total revenue, if you follow the blue line at the top, total revenue, we had 30 million in the quarter. We had 19 million during the whole of last year, so that's obviously the effect of the ramp up, that we are ramping up volumes, and we had deliveries of about 2,000 tons in Q1, so that's what's delivering the 30 million of revenue. And obviously as we ramp up, we expect to increase deliveries significantly and increase the revenue significantly as well. Gross profit was still significantly negative this quarter. So we had minus 25 million of gross profit, a bit down on Q4. Obviously we had more revenue, but we also had a high energy cost in quarter one. Our energy cost has been largely 1 quarter delayed, so we basically take the pricing that was there in Q4, which we've had in Q1, which has been high. So a significant proportion of our variable costs, not quite half, but a significant proportion is energy cost, and that we expect to come down in Q2. Fixed costs under control, stable level versus last quarter, a bit down versus last quarter, and here we have 55 million, slightly lower under IFRS compared to the previous accounting standards because of the lease cost which comes out. And I think I could also mention here we have around a 2 million SEK cost included in those fixed costs, which is the expected cost of the fire, basically the repairs after the fire. So that's included. When it comes to the cash flow, here you can see the EBITDA. The top line is the same EBITDA you saw on the previous slide, so you can follow the EBITDA. Then we have the cash flow from operating activities before changes in working capital, which tracks very close to EBITDA. There's basically a financial cost in between, so that's the reason for the difference between the cash flow from operating activities before changes in working capital and EBITDA, but it's basically following the development of our EBITDA. Then we have a change in working capital, where we have a minus 10 this quarter. We are building up some finished goods inventory, which is negative on working capital, but then we are using up raw materials, which is in the other way, and we have some increase in accounts receivable with the increase in sales as well. But as we've said before, we have a significant raw material inventory, so we don't expect to have to we expect to be able to work down our raw material inventory over the next quarter or two. Cash flow from investing activities is Capex, and here we have minus 56 million in the quarter, and we've largely completed, as Patrik said, we've largely completed the investments now in the 60,000 tons. So we don't expect a significant number there in the next quarter or two, because we've largely completed the 60,000 tons. Once we decide, and I'll come back on Capex, but once we decide to initiate the next step to 120,000 tons, then we will have Capex for that part, but that's not initiated at the current time. So then total cash flow from both operating activities and investing activities is minus 158 million in the quarter, and that's basically the free cash flow we are financing and the free cash flow that we have. And going forward, obviously, as I said, the Capex line will come down significantly, and then the cash flow from the operating side should improve as we ramp up and increase the revenues, in particular. So we expect to see the free cash flow become less negative, and then as we ramp up to become positive. So that's basically the ramp up that we're financing through the negative free cash flow until we get to a positive situation. And this is how we're financing it. This is our balance sheet and the financing we have. You can see we have a total cash and cash equivalents of 181 million. Of that, the 126 is held in the reserved accounts, and 55 is cash and bank. Then we have our total financial liabilities, which 868 million at the end of March. And here at the end of March we had drawn the original credit facility and the full ECA loans. But then, as you've seen, we've also now signed an extension on the credit facility, so we have another 75 million available under the extended credit facility. And then under IFRS there is the change in leasing debt, as I said. So we have an asset on the balance sheet and a debt here with 320 million according to the lease. Yes, so finally, one final slide just to show the status on the Capex, and here just to underline there's no change in the expected Capex versus before. We have invested up to now 1,282 million SEK in Renewcell 1 in the 60,000 ton line we have, even though much of it is already dimensioned for 120,000 tons, but that's the investment in the first step to 60,000 tons. So we estimate to be around 1.3 billion. So you see we're largely there. We don't expect significant additional items here. And we estimate then the Capex to go to 120,000 tons to be in 1.45 billion in total. So another 150 million after the step to 60,000 tons. And this, just to confirm, it excludes the leasing Capex. Yes, so with that I will round off, and we can move to Q&A.
Thank you so much, Patrik and Toby. Great to see your revenue grow along with your ramping up. I'm sure that will be discussed now as we unleash the equity analysts for the Q&A. And we start off with Axel or Persson from Nordea. Please go ahead with your questions.
Thank you very much. So my first question here relates to production. So of course a step up in production here in April versus March, but of course you had a fire in March. So if I adjust for the fire, it kind of looks like the month-over-month production here was relatively flat in April. Is that a correct assessment from my part? And if so, why wasn't it a greater growth month-over-month, and what can we expect going forward?
Well, what you can see is actually that April numbers might be a little bit low, on the low side, because when the fire occurred, we already had a whole system full of product, so in the buffer tanks and so forth. So we continued producing throughout March. So we came into April with a bit of was low amounts in the system, in the tanks and so forth. So the first couple of weeks of April was quite low production, but we were able to catch up on that in the end of April.
Okay, great. Thanks. And my question here also relates to the production here in April. So a pretty high yield if you compare to total production and also what is defined as Circulose. So is that a function of rerunning all material in the machine, or is that a level we can expect going forward as well?
Well, if you mean the percentage level, that is, when you're starting up a plant, you want to get control, and that is what we have. So we're getting to control right now, and then we're going to increase, and then you move it, and then your control is going to spread out a little bit. So you're going to see that moving back and forth for the months, but we are also increasing the capacity in the line. So that's what you can expect as we go forward. We're not done with the ramp up yet. We still have things to do, but we want to do that in a very controlled way, and we're following Six Sigma rationale on how to do that. And you probably heard about it, how it works, and you need to ensure that your deviations in your production is as small as possible. And when you have that under control, then you actually move it upwards, and then that's the way you actually ramp up plants like this.
Maybe I could add there, Axel, that we reworked some volumes in March, actually, in the days after the fire. That was how we kept production up in March, basically. But we haven't reworked almost anything in April, so it's really all produced from raw material to finished product in April.
Okay. Great, thanks. And my final question here on risk management. So, of course, you've had some incidents in the shredder parts. A small fire, and then, of course, the more significant fire here in March. So what has been implemented to avoid this going forward? Obviously, it's been some difficulties in the dust generation and also high friction. I presume that's the main issue. So maybe what kind of implementation is done to make it more firm going forward as well?
Yeah, we have installed sprinklers in the shredders and also in the dust filter, and we are also looking into other remedies when it comes to flare protection and those kind of things. But those systems has not been delivered just yet. But the sprinkler systems are the ones already installed in all these units already.
Okay, great. That's all my questions. Thank you very much.
Okay, thank you, Axel. And let's move on to Christian Kopfer at Handelsbanken. Please go ahead with your questions, Christian.
Yeah, thanks, Jonathan, and thanks, Patrik, Toby, for the presentation. Just a few questions from my side. Firstly, about pricing. If I understand it correctly, you have some indexation on the prices going into Q2. I know that you don't want to comment specifically what your prices are. You don't need to do that. I just wonder, do you see that trend of indexations or call it increasing prices as a continuous trend also going into the second half of this year, or will that remain to be seen?
The indexation is actually there in order to compensate for high energy cost and let's say high transportation costs and other things that we have in those indexes. The base price, though, is something that we have already increased somewhat from what you had in the IPO. So it's there to protect the margins that we have already established with the new pricing. So I think that's the way you should see it, that we are protecting the margin rather that you're going to see higher margins or less margin. It's margin protection from the indexes.
Okay, so that basically means that you have the door open to further indexations depending on what's going on with your external factors, right?
Yes, correct.
Yeah. Okay.
And you will see them vary over time as the indexes, as the underlying costs that they're indexing for change over time. You will see them change over time, of course.
So if I look at the gross, call it gross result or gross profit level, it was pretty much unchanged from Q4. Maybe you don't want to give exact financial forecast here, but can you at least say that you expect gross profit to reach break even during Q2? Or?
I mean, maybe I answered, but as you said, we don't give forecasts. I mean, obviously we will see the revenue change as the deliveries increase. So, and we'll continue to release the monthly, so you can follow that. But that will obviously help and improve gross profit. The other big factor I think we can mention is we have had a very high energy cost in Q1, and as I mentioned, if you look at our variable costs, a bit less than half is actually energy in Q1, and that was really driven by this. Our steam cost is driven by the price of a pellets index actually, which was very high in Q4, much higher than it's ever been before, but it's come down significantly in Q1 to around half the level it was in Q4. So we expect to see that effect really helping our energy cost as well in Q2, and then it's still a high level in Q1. So I think there's room for further reductions as that index comes down further, I hope. But those are probably the two biggest effects. And then also as we ramp up production, we get better all the time in our consumption of not just raw materials. That's probably reasonably good already today, but particularly in chemicals and energy per ton, because we're kind of running large scale machinery, and we use significant amounts of chemicals and energy even when we're producing less tons than we will do in the future. So I think we will see.
Right.
We can't give you a forecast number.
No, that's right, Toby. On the ramp up curve, what are the key challenges for the upcoming months here? I mean, you have had running into a number of difficulties, which you can say is normal for this kind of industry. But nevertheless, what keeps you awake at night? What are the most worries here when it comes to really achieving the desired production curve?
Well, maybe I can start off saying I'm sleeping quite well right now. We've had some issues in the shredding because we got a lot more dust than expected. We made investments during the quarter and installed those investments during the quarter. So that is there now, and then we got the fire, but that set us back a little bit. But right now things are moving in a positive way. What's around the corner, nobody knows. But if you look at the whole plant, we're producing from start to end with a very good yield, which is very important to me. Yield is important. It's the first thing that is important, and then you actually increase the capacity as you go forward. So this gives me a lot of confidence in increasing the capacity as we go forward. I think also, getting up to longer and longer runs and stable productions, that is also helping out a lot. So we are on a good track. But I also want to stress that it's tough. I mean, you're starting up a new plant. It's for every type of new plant, even though established companies, it takes a few months until you're actually there. But it looks positive right now. What's around the corner, nobody knows. But right now, knock on wood, it looks positive as far as I can see.
Right, and then perhaps finally for me, just leave the floor open for the next analyst here. But finally, you have produced, if I have the numbers correctly, about 1,000 tons of, call it B grade material, or what you want to call it. But do you have a plan now to get that out in the market, or how does it look?
Yeah, we have a plan, and we're working with customers via our partner Ekman on selling that material. So far, customers are testing, and eventually we hope to sell that material, throughout the month, throughout the quarter, or and so forth. But testings are ongoing, and materials are there for their approvals.
Right. Thank you very much.
Thank you, Christian Kopfer, and let's move on to Pareto and analyst Niclas Wahlström. Please go ahead.
Hi, thank you very much, Patrik and Toby, for the presentation, and Jonathan as well. Can you hear me?
Yep.
Excellent. I just wanted to first ask a question when it comes to deliveries. Just to clarify, what was the reason that the deliveries was flat month on month relative to the production that increased?
Well, it was because we were producing. We had a fire, right? And we were producing, and we came in to April month with a little bit low capacity in terms of towers and so forth. So that means that we couldn't produce much more. So that's the main reason. We got a little bit delayed because of that, about 10 days of production that then later on in April actually came into, let's say, our production numbers.
Okay, does that mean that maybe there will be a slightly larger step up in deliveries already at the beginning of this month, given that you sort of completed a bit more towards the end of this last one?
Yeah, maybe. Yeah. So we are working towards that. So that's as far as I think I can say at this moment in time. But we are increasing capacity. We are also increasing our sales.
Okay, great. Thank you. Then I have a follow-up question. Do you expect sort of the same effect on the gross margin when you're going to be scaling up to 120,000 after the 60,000 tons, that you need to buy and purchase a lot of raw materials, and that you're sort of going to have the same sort of cash effect, slightly worse in the beginning, and then sort of get back cash flow towards the 120,000?
To a smaller extent, yes. I think it won't be to the same extent we have now, because we're not going from 0 to 60. Then it's a bigger effect. But we will cash-wise, we will need to buy in some raw materials ahead of that, and you could say margin-wise, we will have we expect to have a drop in yield and an increase in the specific cost per unit at the beginning, as well as we would come online with new equipment. So I think you would see some effect of that, definitely. But I think it would be not the same as we see now, because we're ramping up from 0. We also have the kind of energy situation we have now, which is partly related to ramp up, but it's also largely related to the energy situation in globally that we've had in the last 6-12 months.
Okay, thank you. And then this is one last question I had. Patrik, you mentioned something about some goals 2026 and 2030. Could you maybe touch back upon that and compare that to previous targets?
Yeah, the goals that we have for 2026 has already been communicated. We're going to have 360,000 tons by 2026. The idea on 2030 is more of a mind, just to put something into the market and what could be. I mean, we have not taken any decisions of those volumes. I just wanted to show that if we would have 1 million tons, that would still mean that we have 0.7% of the world market, so it's very low. And we see that the whole market is moving towards circular solutions in general, but the fashion industry in particular. Fashion industry is looking with left and right for circular solutions, and currently we are the only one out there that can deliver that with a virgin quality type of material. So we use 100% recycled textiles, making a product that can be recycled again. And then of course, you get garments that you can purchase in stores that are feeling and have the same colors, feeling and so forth as virgin type of materials. And on top of that, our process, since we're producing dissolving pulp, is a drop-in product directly into existing value chain. So when you look at all those parameters, we have a very good opportunity of capture a big chunk of the market, but still 160 million tons by 2030 and a growth of about 5 million tons per year. That is of course a blue ocean that you have there. So we're going to do what we can in order to support the growth, but it will not be enough materials as we go forward, as I see it.
Great, very thankful. Very helpful, sorry. That was it for me. Thank you, guys.
Thanks.
Thank you so much, Niclas. That was 3 out of 4. And now let's welcome Sofia Sörling, representing Carnegie. Please go ahead.
Yes, thank you. Thank you for your presentation. Great question from previous analysts. I have a follow-up questions only. So let me start with the input material. are you able to fully produce Circulose now with clothing waste as input material, or do you mainly use industrial waste during Q1? And when do you expect to only use clothing waste? That's my first question. And perhaps also I can give an additional question. It's also on inventory level. So you have per Q1 roughly 180 million. Could you give us the split of how much is finalized products and how much is raw materials? Thank you.
Okay, so I'll take the first question. Toby, you can take the second one. When you're starting up a plant, you want to have control conditions as much as possible. So today we're running mainly industrial waste in the plant. And towards summer there, or beginning Q3, Q4 somewhere, we're going to start feeding in clothing waste, as you call it, which is what we call post-consumer waste. But we are recycling 100% textile waste. Long term, we will use both those source or streams of raw material. And we will not make a big difference between the two. And we will purchase the ones that actually work best in the production, but also are the cheapest. And if you look at industrial waste when it comes to clippings and so forth, they are not far off from textile waste. Actually, in some cases, it's actually cheaper. So we're going to take it as our prerogative to use the raw material that is the cheapest, but also works the best in the plant. But we have the systems to take away the buttons and zippers and everything from, let's say, a pair of jeans and T-shirts and what have you.
All right, thank you.
So the second question.
Yeah, the second question.
Inventory.
I don't have the exact figure, but of that 180 million, around 150 or thereabouts is raw material inventory, and then there's some finished goods inventory, and there's some spare parts inventory as well, which is there. So, but the majority is still raw material inventory.
All right, thank you. And perhaps a continue questions on Capex. So you estimate that the residual Capex is 150 million. You have not initiated this investment decision, but could you give us some guidance when you expect to do so? Will it be in, for example, Q1 24 or in Q2 24? And also if you can give us some details on how you expect to finance this additional investment. Thank you.
Yeah, well, I mean, I think decision-wise, it's when we feel confident that we are through the ramp-up of 60,000 tonnes and basically we can see we financed that ramp-up successfully and we are through the other side. So so that's kind of that's number one. You know, I would hope we're well in a position, as you say, in beginning of 2024. It could well be earlier, but we have to see. And then when it comes to the other part of your question about how we finance it, we believe we have, I mean, the financing in place. It obviously depends on how the ramp-up proceeds. There's an uncertainty there in how quickly we get first to the break-even point and then up to the 60,000 tonne capacity level. But then we will obviously become cash flow positive. So the speed with which we do it also, it can be financed from both the financing we have, but also from the cash flow that we will generate after that point. So it's a combination of both.
Right, thank you. And perhaps a final question here is a follow-up question on Christian's question actually on ramp-up and break-even on gross margin. But I know it's difficult for you to guide what you think you will produce, of course, but would you still say that that you need to reach around 2,000 tons per month in order to reach a break even on gross margin, and then 3,500 on reaching a break even on EBITDA? Or if you can give us some updates on
yeah,
that
no,
production.
we still believe so to be about 65-70% of the 60,000 tonne capacity is when we get to break even on EBITDA. So that's 3,500 tonnes roughly. So that's and then it's earlier when it comes to gross margin, obviously. But we don't have a forecast or a specific volume level we give on that.
All right. Thank you.
Thank you so much, Sofia. And let's move on. I think actually most of the questions have been answered already that came in the chat, but there is one actually asking, will productions slow down or stop in July when it's vacations? Do you need a service window or anything? What is July looking like?
No, I don't think so. I mean, we're running 24/7 and we have the shifts that we need, so we will not stop.
Okay. And before we close this interview, tell us, on next week, 11th of May, you have a Capital Markets Day. What can we expect besides getting a glance of the plant in Sundsvall?
Yeah, it's going to be, we're very much looking forward to that. We're going to have a lot of our investors there, and of course we're going to present what have happened, but also showing the plant in operations and taking them through. But we will also talk about strategy, you know, where we're headed, what's going on, what's happening on the market and so forth. I mean, we're trying to do that on these type of occasions as well, but we're also going to do that during that day and kind of give a feeling for where we're headed towards. There will also be a lot more discussions around what's happening on the market. So our CCO, Tricia Carey, she will have a big part of that, apart from Toby and me, of course. But she will have a big part talking about the market, the brands, the textile manufacturers, and so forth. And Tricia and I have been traveling extensively, and we will continue to travel extensively to meet the market now when it's possible to do. When we were in China last, we were in the Intertex. The interest is enormous for us. A relatively small company in Sweden, you know, we get on the big stages all the time, and we get mentioned in New York Times, we get mentioned in Vogue. I mean, we get a lot of attention. I had a speech in the UN just recently and so forth. So we're getting all that attention, and you know, that is also something that we'd like to bring forward to our investors, just to kind of get a feel for what's actually happening out there on the market when we meet customers.
Great, a lot of interest. And you can actually watch that broadcast on this channel, Direkt Studio, and you will also communicate the link to it. Good luck to that, and thank you so much for participating today.
Thank you.
Thank you.